Okay, good morning everyone. Usually when I come to this kind of presentation, I will look at the market yesterday and also on an annual basis because it's our annual event. Well, if the market is performing well, then I'm fine with that because we can see a lot of the smiley faces. But what if the market is not that great? It's koyak. In this case, probably I'm thinking to take MC or what. But fortunately, today is a good time for us to have some knowledge about the market because we can see even yesterday, S&P has hit all-time high. Well, coming to the year of 2026, we know that the market has been volatile. The market has always been eventful. I would draw your attention to the slide on your left-hand side. As what you can see from this slide, there are so many informations, there are so many figures out there. What it tells you, the market is always eventful. And not to mention that in the year of 2025, I have colored it in red. You can see that from DeepSeek, when everyone is saying that, oh, China is going to overtake US. Coming to tariff day, oh, Trump is going to manipulate the market. Coming to tariff pause, oh, the market is surviving. And what's more interesting about the year, when we are approaching the year end, when all these big companies, all these especially the tech companies, they are delivering a superb earnings. People are saying that we are approaching the AI bubble. And what's next? The market clash after that. But fortunately, coming to the year of 2026, we can see there are some of the rejuvenation of the market. And definitely, as an investor, we are glad to see that. But again, I just want to remind you that the market is extremely eventful. And there is no one can predict the market precisely. What I mentioned just now, usually I will look at the market. So I would want to draw your attention to the table on the right-hand side. You can see that last year, most of the market, they managed to deliver double-digit kind of return. It's a great gain. But again, for some of the investors, because this year we just use the invest export format, it's export format. So probably we have some of the new investors here. For the new investors here, maybe we have 3 questions. The first question, what is FSMOne? Well, FSMOne, we are a research-driven multi-asset platform. Meaning that when you want to invest, we have plenty of options for you. Unit trust, stocks, ETF, bonds. If you've got no idea, managed portfolio are here to stay. So it's a platform that really caters for the DIY investor. If you think that you want to handle everything yourself, then FSMOne might be an option for you. The next thing, who is this guy standing on the stage and telling you what is going to invest next? So being a research team, our daily job, our daily task is we write reports, we study the markets, and we study on the investment vehicle. Well, we understand that one of the struggles being an investor in the era of 2026 is data is no longer a struggle for us. In fact, we got so many data, we got so many gurus are telling us this, that, blah, 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 to invest. But how to analyze the data? That's the struggle for us. So we understand the struggle, and we are here to tell you, after our analysis, that we think some of the assets, some of the investment are the best fit for you in a certain cases. So, and fortunately, that is not only an annual basis, because you are not only seeing me once per annum. In fact, from time to time, we do have some of the webinar there. As you can see, like our Ask Me Anything on the online version. And I will just give you a little bit of trailer here, where later we'll have an Ask Me Anything in a physical version. And fortunately, that we are interviewed by some of the medias out there, including Chinese, English, and Malay. So I just want to highlight, we are not only exist on an annual basis, we are always here to stay. To fit the team, then, now, next. Now I want to enter into the then part. Last year, our research team, we have came out with this investment team, 2025. where you can see that last year some of our regions called US, semiconductors, technology, Japan, China, Malaysia. Fortunately, there are some of the events that happens to benefit us. Then we managed to 80% kind of hit rate. But what I want to tell you here is not just about hit rate. In fact, can we precisely predict the market? To be honest, I don't think so. But what we are doing, we study the fundamental, and we think that because of some of the money flow, some of the fund flows, some of the fundamentals issue that could drive the market to the intrinsic value. So we call the market. That's what we do on a day-to-day basis. After what has happened, now I want to say what is going to happen. For the year of 2026, I understand that investment thesis is a kind of very boring tool, where home ground advantage is a fancy topic, but maybe some of you is thinking that it's quite tough to digest. What is this? So, long story short, after last year, some of the developed markets, they managed to deliver a superb performance. We think that this year, followed by some of the tailwinds that we are predicting, Fed rate cuts, the boom of the emerging markets, the earnings visibility of some of the regions, and what to mention, and not to mention that the government supports to the market. Okay, I repeat, the government supports to the market is crucial to drive the market higher. So that's why within these regions, we have called the home ground advantage, where in a short story, we think that Asia is a good place to invest. Okay, I repeat, Asia is one of the key markets that we are thinking to drive the performance of the year of 2026. Okay, after the simple story, let me kind of confuse you a little bit by some of the markets of we like. So basically, you can see that from the slides from now onwards, you have a chart on the left-hand side and the wordings on the right-hand side. So I'm going to encourage you to take a picture for every slide we have, because you know it's quite tough for me to explain every slide precisely. And to be honest, for one slide, I can talk it about 1 hour, believe me. Okay, after the short introduction, let's move to the key investment topics here. Singapore, one of our favorite markets. Well, back then when we talk about Singapore, what can you think of? Like DBS, UOB, maybe Singapore Airlines, maybe some of the Singapore REITs. It's a stable but boring place. But the 2025 performance is usually telling you that this is a Singapore market performance. As you can see from the top part, the Straits Time Index, which you can think of like somewhat like FEN in Singapore, they managed to deliver a 28% or near to 29%. Can you imagine that this is the market that is so-called boring? And what's next? Out of the 30 players there, 29 of it managed to deliver a positive return. We do believe that it's because of the earnings visibility and the government supports, like what I mentioned just now. Singapore, the government has explicitly, they just throw the money to the fund manager and ask them, hey, you're gonna use this money and buy into the capital market because we want to inject the stimulus into the capital market. So you can see that from some of the policies like EQDP, GEMS, it managed to improve the liquidity of the market and subsequently drive share price higher. What's next? We believe that there will be more. So we do believe next year it could be higher. Not to mention that amidst the current scenario where, Donald Trump, he's a guy full of unpredictability, Singapore being a relatively neutral stance. When everyone is struggling with 19%, even China once upon a time had 100%, Singapore, 10%. So we do believe that having a neutral stance is crucial for the year of 2026. And that's why Singapore being one of our favorite markets. The next one, after I talk about one of the best performing markets in the year of 2025, let's talk about one of the worst performing markets in the year of 2025, Malaysia. Well, to be frank, Malaysia is one of our favorite markets for the year of 2025, but too bad, especially on the first half of the year, because of the unpredictability, because of the risk-off approach by the foreign investors, Malaysia market is struggling. What I would highlight here, this chart is probably my favorite chart to tell you the story of Malaysia. There are three components in the Malaysian market: retailers, foreigners, and local institutions, just like EPF, PNB, Co-op, so on and so forth. As you can see, last year, what has happened? The blue color line indicates that foreigners, they are running away from Malaysia. And it is one of the reasons to trigger the Malaysian market to experience this kind of pitfall last year. But what's positive one? You can see that the gray color and the light blue is always on the positive territory. Means that despite the foreigners are fleeing away from Malaysia, our local institutionals, retailers, they are still buying into Malaysia. I'm going to tell you, in terms of the fundamental, in terms of the framework, in terms of the earnings, Malaysia is great. But foreigners don't like us. What's the catalyst that we are waiting for the year of 2026? We are waiting for foreigners to come back. And I just want to tell you that if you still recall the KLCI when last time it experienced 1080, you can see all the charts here, all the bar charts here is on a positive territory. So moving onwards in the year of 2026, when the visibility, especially we do think that the tariff is no longer a concern for us, when everything is done and dusted, the foreigners might come back to Malaysia, and when it happens, it could drive Malaysia's share price higher. The third market that we like, China. I don't want to confuse you with the charts of, full of colors here, all the fancies like trillions or billions of yuan of capital, so on and so forth. But I just want to highlight to you, I just want to clarify to you, China is a very interesting market. When on the developed market side, we're talking about, the bottoms out. When the earnings recover, it could reflect in share prices. China's story is a little bit different. Where China is a very top-down market, as you can see, the government tone is important to know what is going to happen next. From the latest statement from the government, they really explicitly tells you that what's their focus for the next one. They have to have tax sufficiency. They want to combat some of the issues that has been worrisome for them. And not to mention that one of the key catalysts that I mentioned just now, earnings. The third pointers, we do admit that in some of the factors like, especially like semiconductors, the IC players, US are the top players. But for the consumer-centric, for example, CCTV, drone, even your vehicles, China is the players that dominate in this field. So among China, what is the place that we like? China Tech. The table on the left-hand side is showing you that some of the large companies in China that they have the intention and they are doing, and in fact, they are working quite well in terms of come up with the outlook of AI and related business. On the right-hand side is just reiterating that the government has reversed its stance. You need to recall that the backbone of the economy is private market. So one of the reasons that China is experiencing a pitfall last time is because the government is not so friendly to the private sector. If you still recall Ma Yun last time, he's no longer a favorite boy for Xi Jinping. But now, the government has already explicitly cited that these private sectors, they are targeting on it and they want to inject stimulus into it. That's why we believe China Tech is going to gain speed with national interests within. Speaking of tech, one of the hot topics nowadays, AI, internet, technology. As you can see, since the introduction of the ChatGPT on the table on the right-hand side, since the introduction of ChatGPT at the year of 2022, a lot of innovation has been happening. A lot of events has been happening. And the next question, in fact, is already asked by thousands of times. Trust me, I already stayed in IFAS for this year, I think it's my 4th year. It has been asked for thousands of times. Is AI still investable? Are we at a bubble? Will the market crash? These are the frequently asked questions. And I do believe that in the year of 2026, it's going to be more. So the answer for is AI still investable? Simple. Yes, but choose carefully. Among the technology spaces, we have separated into 2 segments. The first segment is internet, the software players. You can think of like some of the companies, the software companies like Meta, Google, Microsoft. These companies we categorize in as internet. We think that in terms of the internet, especially on this CSP, CSP means that the cloud service providers, they are the big companies for the tech players. They have spent so much billions and trillions of dollars into the AI infrastructure. And you can see that starting, there are some companies that are starting to have a breakthrough. Google, for example, the Gemini is a beast. And to be honest, personally, I do use Gemini a lot. Now, you can sense that the AI is starting to change the way we're living. Can you recall last time when Microsoft, they introduced the monster tools, Microsoft Office, Excel, Word, PowerPoint? We do believe that AI will be the next one. This is on a software stance. Second, can you imagine that if you are driving a car, you are maybe just a little gadgets like this, everything is, they have some of the software inside. They have some of the technology inside. And I do believe that, in fact, we do believe that the AI is still a very early phase. Where nowadays, although we say that AI is changing the way we live, but how much has it changed? 80%? 90%? I don't think so. That's why we think that currently it's still at a very early phase. And if you want to invest in the AI-related players, we think that these companies, especially those companies that have a sufficient balance sheet strength, because investing in AI is not just a pennies kind of dollars. You need to have a sufficient cash flow. And we do see some of the small cap players, they're already experiencing a boom in terms of the share prices, despite they are not earning profits. So I want to urge every one of you here, AI is investable, but only invest in those companies that have a clearer monetization pathways, diversified revenue, and proven pricing power. After we talk about AI, let us talk about another poster boy, semiconductor. Well, I just straight away moved to our conclusion where we revise. In fact, semiconductor was one of our favorite markets for the past 2 years. But now, we have revised it to a neutral stance, meaning that we think it's still worth to invest, but probably you should take a more cautious stance at the same time. Why? We acknowledge that the earnings visibility on the AI players and on the AI-related semiconductor players is massive. In fact, you just look at, I believe that every one of you knows NVIDIA. Every one of you knows Intel, knows AMD, even the latest poster boy, Micron, SK Hynix, Samsung. These players, you can see that. I just take the IC players as an example. NVIDIA, they just launched, they keep on evolving. Their earnings is massive. But how about the share prices? You can see that the NVIDIA share prices has been quite stagnant, especially for the past 2 to 3 months. Means that although the earnings is superb, but people want more. In this case, we can forecast the earnings, but we can't predict the market sentiment. So that's why we think that some of the valuation concern is definitely a factor that you need to consider when you are investing in semiconductor. Japan. Japan is a story of economic transformation. I do believe that Japan is definitely a place for your travel portfolio. But probably not a lot of people consider to include Japan in your investment portfolio. What if I'm telling you that Japan's government has been urging the Japanese companies to reform, to restructure, and we believe that it could be the structural transformation. It could be the multi-year of transformation to drive Japanese share price higher. I know that it's quite tough for you to visualize what can this kind of transformation makes. Let me give you an example. China, 10 years ago, probably 12 years ago, 2014, they do have a similar approach. And what's next? A boom, a multi-year boom. Korea, another government that asked the companies to have some of the reformation. What's next? Boom. So Japan, we do see that there are plenty of catalysts, but at this juncture, we think a balance towards a large and small caps will be viable. The last part of my investment, of my presentation, fixed income. After I telling you so many sexy stories that could give you the growth potential, this is a place that if you would just want to seek for a stable one, you don't want to have this kind of sexy story, I just want to take the money, I just want to sleep, then I don't care. This is the place that you need to look for. Long story short, we do see opportunities in the medium bond, and we task investors stick to IG, investment grade, and selective in high yield. To be frank, this part is a complicated part. So we do have another specialist that is going to present to you our view towards bond. And in fact, for the panel discussion later, we do have a bond expert, which is telling you how do you allocate bond into your portfolio. So definitely, I will leave, because for the time interest, I will leave the time to them to explain. Feel free, stay tuned to watch the presentation later. Well, overall, that's a summary of our FSMOne key investment team in 2025. Home ground advantage. Where we like, the place that we stay. Malaysia, Singapore, China. Beyond US, what's the places that you can invest in? Asia, Japan. For the technology, we think that there are still plenty of upside potential, selective opportunity, internet, and also China tech. Fixed income, medium duration, and investment grade. And last but not least, currencies, we do think that there's a negative view for US dollar, but at the same time, we positive for Singapore and Japanese yen. For ringgit, we are holding a relatively neutral view. That's all from me. I'm still in the hall. I understand that for this kind of short period, it's very tough for me to explain every single sense of what we are thinking for the markets ahead. I'm still in the hall, and I will be the one on the panel later. Any question, feel free to fill in the QR code, and I will answer you later. Thank you, everyone. Thanks for your time. See you.